Good morning, students. Today we are going to discuss about capital budgeting. Capital budgeting is one of the important strategic decision of an organization. Today in our class, we are going to discuss various concepts related to capital budgeting. Meaning of capital budgeting, features of capital budgeting, understanding how capital budgeting works. Then, what are the various steps of or process of capital budgeting, techniques or methods used to evaluate the feasibility of capital budgeting. Then, what are the factors affecting capital budgeting and limitation of capital budgeting. This is our agenda of the class. What is meant by capital budgeting? Capital budgeting is the process of making investment decisions in long-term assets. How we are going to make an investment in long-term assets? You should know there are two types of broad classification, that is two categories of assets. One is a short-term assets and long-term assets. Short-term assets, we can say that it is a current assets. Long-term assets, all fixed assets comes under the long-term assets. So in a capital budgeting, we will decide whether to invest in a particular project or not. That is the main aspect of capital budgeting. Capital budgeting is the method of determining and estimating potential long-term investment options involving huge, that is enormous capital expenditure. Any project which involves huge amount of capital investment requires lot of care on the part of the management, because once the investment is made, it is very difficult to reverse it. That is one of the important consideration we have to take into care before making an investment in long-term assets. So, capital budgeting involves planning to acquire worthwhile projects together with the timings of the estimated cost and cash flow of each project. That is also one of the important aspects. Before making an investment in any long-term assets, whoever is investing, they will do some basic analysis. First one is how many years it will take to get back our investment and what is the time value of the money, inflation, all aspects they will consider before making an investment in capital budgeting. So capital budgeting involves evaluation of the project. Evaluation of project is nothing but whether to invest in a particular project or not. That means which project should be accepted. So one of the important objectives of financial management is wealth maximization and profit maximization. So in order to maximize the shareholders' wealth, important aspect is the rate of return which we earn out of an investment should be more than the cost incurred for raising the capital. Cost incurred for raising the capital is nothing but cost of capital. So your net present value should be given the income generated, or the present value of your money should be more than the cost of capital. So when they are making a capital budgeting decision, it is mainly based on forecasting. They will forecast how much cash flow will be generated, how many years it will take, what is the present value of money at that time. That is important aspect they will consider when they are making a capital budgeting. So another important thing is estimate the future expected cash flow. When they are estimating the future estimated cash flow, they will consider the present value of the money. That is the important aspect every financial manager will consider. So, capital budget facilitates in the task of compiling of projected balance sheet. The capital budget can be prepared for a long-term as well as for short-term capital. The capital budget specifies capital intention of the management and as such often reflect the management policy in respect of investment, expansion, growth, contraction, production, and profit. It means that capital budgeting is done for a replacement of the asset or expansion of the asset or purchase of new thing. So these aspects will be considered in case of capital budgeting. So here the decision of investing funds in the long-term asset is known as capital budget. So now you can understand simply when you make an investment in a long-term assets, we have to assess the value or evaluate the value of the investment. Value of the investment means you have to evaluate the risk as well as return associated with that particular investment. That is one of the important aspect in capital budgeting. Capital budgeting is the process of selecting the asset or an investment proposal that will yield returns over a long period. So how many years it will generate cash inflow as well as what is the risk associated with that cash flow will be assessed in case of capital budgeting. So next let us discuss about what are the process of capital budgeting. It means that how before making an investment in capital budgeting, what are the aspects they will consider. First one is the capital budgeting is the process of evaluating long-term business decisions that need large amount of capital, that is enormous amount of capital is required. It is a very risky decision. That's why every organization before making an investment in capital budget, they will do lot of homework and analysis, basic and fundamental analysis, they will do it because huge amount of money is parked in that particular investment. So it is a way to find a better deal for the growth of the business. It is often related to important capital decision that impact the bottom line of a company. It has certain characteristics or features. So what are the characteristics of capital budgeting? First one is it is a large investment. Nothing but huge amount of money is invested in capital budgeting. So it is related to investment of large fund. It is often used to find projects that need large investment. So capital budgeting is concerned only long-term investment. Another important thing is in capital budgeting decision, manager analyze different opportunities and find out the solution with optimum care. So what are the opportunities are available, which cases they can invest, they will evaluate. So next, the second characteristics of capital budgeting is irreversible decision. What do you mean by irreversible? That is, it involves huge capital, huge money. Once we have invested, we cannot rectify it. Even if you want to rectify it, it involves huge risk. So therefore, making the right choices and analyzing the basic is the optimum importance in capital budgeting. Once the money is parked or employed in a particular capital investment, so they have to identify whether they will be able to generate the good profit. So if they have any doubt about it, they have to go for further analysis, because once the investment is made, it is very difficult to get back the investment or reverse the investment. Another important aspect of capital budgeting is high risk. High risk means because the future is uncertain. The cash flow going to be generated out of that project is very much uncertain. So capital budgeting decisions involve carry a high amount of risk as large amount of money are invested for a future, the outcome is uncertain. So the high risk nature, because the future is very much uncertain. During the COVID period, we have seen lot of uncertainty. Most of the business are closed. Even whatever money they have invested, they are not able to generate the expected rate of return. So that is also, that's why we cannot estimate accurately. It is a high risk nature. The large funds required in capital budgeting act like debt for the companies. And if the process goes wrong, this may even lead to bankruptcy of the company. So that is the one of the important limitation of the capital budgeting. Another important thing is long-term impact on the profitability, because one of the important characteristics of long capital budgeting, the period involved is long-term, more than 3 years. So the rate of return which they are going to get out of the project is also long-term in nature. The gestation period is also long-term. The firm cannot see in short-term any profit or any cash flow out of the project. So that is one of the important characteristics of capital budgeting. They make a long-term impact on the profitability of the company. In capital budgeting, the funds are invested in a projects that offer the best return. As the process of getting return is long, the decision usually take a long-term profitability point of view. So that is one of the important aspect. It is that the forecasting is done. It is a long-term view. They will not consider the short-term goal of an organization. Another important feature of capital budgeting is impact on cost structure. What is meant by impact on cost structure? The decision of capital budgeting directly impact the cost structure of the organization. As large funds are involved in the process of converting capital budgeting, it relies on cost structure. It depends on purely on the cost structure of the company. Moreover, as decisions regarding rent, insurance, and production have to be measured. So whatever money incur, whatever cost they are going to face, everything will be measured. Capital budgeting measures directly impact the cost structure of the company. Another important feature is it's a difficult decision. Yes, definitely, capital budgeting is difficult decision because the future, we are going to forecast the future. The decision all are related to the future. Future is very much uncertain. The cash flow is also very much uncertain. So managers has to need to look at many factors before making a capital budgeting decision. Another important feature is impact on competitive strength. What is it? That is the strength and weakness of the company that we have to, well, when you are taking up the capital decision, capital budgeting decision, how it impact the strength and weakness of the company, that we have to identify. Similarly, in which industry, who are our competitors, how the capital is going to generate, how their profit is going to affect it, or how we are going to get affected because of the competitive decision. Everything must be analyzed. Next, another important aspect is the importance of, that is the process of capital budgeting. What is meant by the steps to be followed while making the capital budgeting decision? That is important aspect. First one, before making any decision, idea generation. So what is meant by idea generation? Whenever they are going for a capital budgeting, they have the idea whether, in the first thing is whether we are going to start a new business, or we are going to replace the assets, or discard the asset and we are going to find it a completely new thing, or expansion or diversification. So many causes are there. So first thing is the idea generation. Then once the idea is generated, immediately they have the different proposals in their hand. Analyzing individual proposals means there are different investment opportunities. They have to example plan A, plan B, plan C. That has to be evaluated, depends upon the, by considering the various criteria, depends upon the nature of the organization. Here, what they have to consider in terms of risk and return, as well as timing of the return is also very important. In case of finance, we have studied time value of the money. So in the future is uncertain, then the value of money present in our hand is more value than the money which you are going to get it in the future. That is the important aspect. One more thing, each and every 1 rupee have a opportunity cost of capital. Nothing is free. Every money have cost of capital. So in that case, they have to analyze cost, return, and timing of the return. That aspect they have to consider while evaluating the individual proposal. Whether they can invest the proposal A, B, or C, or D, like that, they have to evaluate. So when they are analyzing the individual proposal, they have the different techniques they may follow. Another thing is the planning capital budget. Once they have decided the different proposal, once they have fixed what proposal they can take up to the next level, next thing is they will plan the capital budgeting. So plan the capital budgeting is nothing but how much they are going to invest, how they are going to raise that fund. That is the important thing. Raising a fund is whether they are going for a owned capital or borrowed capital. Owned capital is nothing but common equity shareholders. So it is a cost free. We cannot simply say cost free because that also involve cost of equity. So whether they are going a borrowed fund. The important aspect here we have to consider borrowed fund is whether the firm has debt servicing capacity. That they have to identify, because it is a mandatory on the part of the company. They have to pay periodically interest. It is not optional on the part of the company like dividend. So when the company earns profit, they can pay dividend. But as far as it is in case of borrowed fund, it is compulsory on the part of the company to pay periodical interest. If the company is not paying periodically the interest, they may be treated as insolvent. So the company has to be very careful in raising the sources of fund. Another important aspect we have to consider. One is that whether the firm has a debt servicing capacity. Another important thing is that whether they are able to generate the fund at reasonable cost of capital. They should not incur high rate of interest, high rate of cost for raising the fund. So raising of the fund, then next thing is once the fund is raised, how to invest it. While investing, when they have the different proposal, they will apply the different tools and techniques of capital budgeting. What are the tools and techniques of capital budgeting? Actually, every company, they are following a different techniques, depends upon the nature of the company and type of the investment involved. One is a traditional method, another is the modern method. In case of traditional method, they are not considering the time value of the money. So just they are finding at the how much return they are going to generate, how many years they are taking. But they are missing the important aspect. What is the present value of the money during that period? That is the time value of the money they are not considering. That is one of the important limitation in case of the traditional method. Next important method is the modern method. Modern method, they are considering the time value of the money. Okay, what are the methods they are following under traditional method? One of the important method they are following in case of traditional method is a payback period method, accounting rate of return, Accounting rate of return is otherwise called ARR. These two methods are used to identify how much rate of return the particular project is going to generate. So in case of payback period, the project which gives able to generate the investment at the shortest period of time may be accepted. Okay, these are the two important methods. They are used to evaluate the capital budgeting in case of traditional method. So when you go to the modern method, the different methods followed are net present value method, profitability index method, internal rate of return method. In case of all this method, important aspect, they will consider the time value of the money. So the future after 5 years, we are going to get a rate of return over a period of 5 years. What is its value at present? That they will evaluate, that will give the true value of the money. So here, another important thing, so through this method, they will evaluate all the proposal, monitoring and conducting a post audit. This is for everything we need to compare actual with the standard what we have estimated, whether any deviations are there that we have to identify. So the process of capital budgeting is explained in a simple way here. The first step involved in capital budgeting is select the asset, whether existing or new, on the basis of benefit that will be derived from the future, from it in the future. So whether we are going for a new asset, whether we are going to replace it or purchase new, everything will be considered. Second step is to analyze the proposal, uncertainty and risk involved. Here we are not only analyzing uncertainty and risk, but also how much inflow it may generate and what is the timing part, that is important aspect. Since the benefits are to be accrued in the future, and the uncertainty is high with respect to its return. So that is the thing. Finally, the minimum rate of return is to be set against which performance of long-term project can be evaluated. What is minimum rate of return? Minimum rate of return is nothing but the cost of capital. Whenever a firm is raising fund from any sources, the important aspect is cost of capital. It has to pay interest for raising the fund. So by utilizing that fund, they should be able to generate more than the cost of capital. So this is the important process of capital budgeting. So next topic, we move on to next topic, classification of projects. What are the different classification of the project? So mainly two classifications, they will do it in capital budgeting. Mutually exclusive project and independent project. What do you mean by mutually exclusive project? When we are accepting one project, we cannot accept another project. That is called as a mutually exclusive project due to money constraint, the capital rationing, that is otherwise called as a capital rationing. So that is also one of the important aspect. Next is an independent project. We can go for accepting all the profitable project, because in case of company, they have the limited resources, limited capacity. In that case, they don't have the option of they cannot accept all the project, even though it generate the income. So in that case, what they will do, they will make it as a plan 1, plan 2, plan 3, and they will evaluate which is giving a highest return or highest period within which they are able to generate shortest period. Everything they will analyze, they will compare with the cutoff rate. For every project, they will keep the cutoff rate. They will compare with the cutoff rate. Based on that, they will select the projects. Next, the independent accept all the profitable projects. The acceptance of one project will not disturb the acceptance of another project. So that is the type of investment. I think now everything is clear about. I have discussed capital budgeting, characteristics of capital budgeting, types, what are the process to be followed. Okay, shall we move on to next? That is factors affecting capital budgeting. So while Investing in capital budgeting, we have to consider these factors. These are the factors which affect the capital budgeting of any firm. First one is the capital return. Second is the accounting methods, what method you are following. Structure of capital, availability of funds, management decision. Then another important thing is the government policies, working capital, need of the projects, lending terms of the organization or institution, financial institution, earnings, taxation policies, the economic value of the project. These are the general factors affect any project. Next thing is the objectives of capital budgeting. What are the objectives we have to keep into consideration in capital budgeting? One of the important thing is the capital expenditure control, selecting a profitable projects, identification of source of funds. These are the three important aspects. Organization needs to estimate cost of investment as it allows them to control, manage the required capital, because they have to estimate. Based on estimation only they can allocate. So that is the one of the important thing they will consider. Then selecting profitable project. That is obvious. Every organization wants to earn profit. So they will select a project which generate more return than the cost of capital. Another important thing is identification of the source of funds. The business needs to locate and select the most feasible and apt source of funds for long-term capital investment. I already discussed that the firm capital raising, that is the source of finance, that or the choice of finance, whether they can go for a debt or equity, purely depends upon the firm's debt servicing capacity. When they have the confidence that they can able to pay interest on debt raised, or they are able to generate consistent and regular cash flow, definitely they can go for a debt financing. So these are the main limitations of capital budgeting. One is a cash flow because we cannot estimate properly. Time horizon, time value of the money, discount rate. So that is the important aspects of capital budgeting. Next, another important thing is the need and importance of capital budgeting. I wanted to discuss long-term, because capital budgeting is the long-term implication. Every capital budgeting, whatever we are doing it has impact on the long term. Then second thing is the involvement of large amount of capital budgeting. Third is the irreversible decision, risk and uncertainty, difficult to make a decisions in capital budgeting, large and heavy investment. So these are some of the important aspects of capital budgeting. This will affect the organization. So they have to do proper analysis before making an investment in a capital budgeting. So next thing is the capital rationing. This is an important concept in case of capital budgeting. What do you mean by capital rationing? Capital rationing is defined as the process of placing a limit on the extent of new projects or investment that a company decides to undertake. Because when the company is having the problem of availability of the funds, the company has a choice of selecting the proposal. That is an important aspect that comes under the capital rationing. So capital rationing is a strategy used by the companies or investors to limit the number of projects they are going to take on a time, because their availability of the resources may not support the firm. So that's why they have to be very careful before selecting the capital budgeting. Next important thing is that there is the different techniques of capital budgeting that we will discuss in next class. What are the techniques of capital? That is the I already discussed. I just given a small introduction about traditional method and modern method. That we will do it in the next class. So just I want to now brief it, what we have discussed, what is capital budgeting, or what is under capital budgeting, or how they will take a decision, what are the steps they will follow, all these things we have discussed. So capital budgeting, again I repeat, it is a strategic, important decision of every organization. Next, it involves huge amount of money. So every firm has to consider the risk, return, and time involved in generating the funds. That is important aspect. Every firm has to consider. So capital budgeting facilitates the task of compiling of projected balance sheet. Then before evaluating the proposal, the firm has to decide what type of investment proposal they are going to do, whether they are going to replace or purchase the new assets, or they are going for expansion. All aspects they have to consider. Another important another important thing is the nature of the capital budgeting. They have to find out, identify. So nature of the thing, whether it is an independent project or mutually exclusive project, that also the company has to consider. So these are the important things everybody should understand about the capital budgeting. One of the important, another aspect we have missed is, that is I have explained already, process of capital budgeting. Process of capital budgeting or steps of the capital budgeting. Just I will tell you, I will repeat. Idea generation, analyzing individual proposals, planning capital budget, monitoring and conducting the post audit. So idea generation is nothing but generating good investment ideas. These ideas can come from number of sources, like from senior management or any other department, functional areas. So that also they have to consider. That is the important aspect in case of capital budgeting. Here, next thing is the analyzing individual proposals. Analyzing individual proposals is nothing but forecast cash flows for each project in order to determine its expected profitability as well as risk associated with each proposal. This is because the decision to accept or reject a capital investment is based on such investments future expected cash flow. So that is the important thing. Planning the capital budgeting. What do you mean by planning capital budget? Again I will repeat. An entity or organization must give priority to profitable project as per the timing of the project cash flow, available company resources, and a company's overall strategies. The projects that look promising individuality may be desirable strategically. It means that the project assures certainty of return, may be accepted or given priority. Last one is the monitoring and conducting a post audit. It is important for a manager to follow up or track all capital budgeting decisions. He should compare actual with projected results and give reasons as to why projections did not match with actual performance. What is the deviation that must be identified? Therefore, a systematic post audit is essential in order to find out systematic errors in the forecasting process, because sometimes the forecasting may not be accurately, that is 100% correct, because time is involved, uncertainty is involved. So there is a chances of errors are happened in forecasting process. So in order to enhance the company's operation, they have to collect the data, evaluate the data, they have to accurately forecast the capital budgeting. So this is also very important in case of every organization. So we have discussed the whatever we are today beginning. I told you we have discussed. Any doubt? I think everything is clear. In the next class, what we can do, we'll discuss about what are the types of, what are the different techniques available for